Podcast Network Asia. FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors! Happy holidays! It's Anjz from First Metro Securities, and welcome to another episode of Market Bites. If you're hunting for fresh trade ideas or just curious about which stocks deserve a closer look, you're in the right place. Today, we're breaking down highlights from our latest company update on PLDT Inc. or TEL. So here's the big news. We've upgraded TEL to a buy rating with a new target price of 1,490 pesos as we roll our valuation base next year. That target reflects a 5.2 times FY26 EV over EBITDA with a core telco business valued at 4.6 times, plus a healthy 6.4% yield on FY26F dividends. Looking ahead, we're forecasting earnings growth of about 5.4% in FY26F and 4.6% in FY27F. Now, let's talk about the Konektadong Pinoy Act. Sure, there are risks, but TEL looks well positioned during this transition. Broadband momentum should stay intact since competition is still ramping up. And beyond that, TEL is ready to capture new demand in three areas. Backbone infrastructure, with port utilization at 58% as of 9M25. Cybersecurity and managed IT services, driven by compliance needs of new players. Data centers, riding the wave of AI and edge computing adoption. On dividends, things are looking attractive. At current prices, TEL offers a 7.3% yield on FY26F dividends, comfortably above Philippine 2-year and 10-year benchmarks of 5.17% and 5.9% respectively. Risks to payout have eased as well, thanks to positive free cash flow coming in earlier than expected, supported by lower capex and asset monetization. Now, here's a quick 9M25 earnings snapshot. Net income came in at 25.1 billion pesos, down by 11% year-on-year, but in line with our estimates. Consolidated service revenues ticked up 1% year-on-year to 145.9 billion pesos. By segment, wireless consumer revenues were flat at 63.2 billion pesos during the period, as legacy drag offset 1% year-on-year growth in data revenues. Total active mobile users climbed 4% year-on-year to 42.4 million, driving a 6% increase in data traffic. Home business revenue rose 4% year-on-year, fueled by strong fiber demand. Enterprise revenues held steady at 35.6 billion pesos, as legacy drag offset a 2% year-on-year growth in corporate data and ICT revenues, which made up 75% of the segment. Cash operating expenses declined by 2% year-on-year to 63.1 billion pesos on lower manpower, marketing, and subsidy costs. This led consolidated EBITDA to grow 3% year-on-year to 82.8 billion pesos, with margins steady at 52%. Looking ahead, what would make us more bullish? We'd like to see the KPI's impact on competition being milder than expected. Continued momentum in fiber, especially prepaid rollouts. Better data monetization to lift mobile revenues. Sustained positive free cash flows. and stronger enterprise growth from data centers and IT services. Of course, risks remain. KPAs implementing rules could be tougher than expected. Online gambling regulations could weigh on Maya. And mobile market share losses could pressure revenues further. So, to wrap it up, that's a buy call for PLDT at 1,490 pesos target price. Thanks for tuning in to Market Bites. If you found this helpful, don't forget to follow us on social media for more updates. That's First Metro Securities on Facebook, Instagram, and YouTube, and FirstMetroSec on TikTok. Catch you in the next episode.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.